All right. What is up, traders? What's up, tycoons? Super excited for today's video on Wadzpay, ticker symbol WTK. We're going to be breaking things down on the daily chart as always. And recently, we did come up and hit our breakout level. Okay, so we had this nice little pattern forming here. And I said we should come up to this level here in a perfect world scenario. That's where the breakout is going to take us to. And that was 0.0167. Now, we have started to get a pullback since that moment. And we're really going to break down some of the key strategies and indicators you can use to help understand price action and potentially look at entries and exits. All right, we're going to take a look at the RSI, MACD, along with our major Fibonacci retracement levels. So smash that like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So the three most important and really most well-respected and commonly respected retracement levels are going to be the 38.2, the 50%, and the 61.8% retracement levels using the Fibonacci tool right over here. Now, you use these to identify trend continuation versus trend reversals, right? So nothing moves in a straight line up or in a straight line down. Rather, you get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. Okay, that's how you spot the trend continuation. So in this case, what we have is we have a low and we have a nice move to the upside. So these three levels right here, these are our major retracement levels, meaning that if we pull back to these levels, it's still in healthy retracement territory to continue the uptrend and potentially head up higher. Now, you also use these to help spot reversals, meaning if we come down, retrace, and then start consolidating and break through those retracement levels, you can spot an upside reversal. And if we move up, retrace, consolidate, and break through those retracement levels, you can spot a potential downside reversal. So now that we have the context of how to use the fibs, we're currently bouncing right off of our 61.8% level, which is going to be 0.0114. That's going to be a really key important level that the bulls need to stay above. Now, we could dip below, okay? But that wouldn't be, coinciding with the candles closing below, right? So if you start to see the daily candles start to close below and we flip 0.0114 from support to resistance, okay, then there is potential that we're bearish below here, and we could be getting a reversal to retest some of our previous lows that we were just at after the breakout. Now, remember, this right here is in blue because that's our blue breakout level, and this is where we should have gone to, and we were looking to see if we could break out past this level off the initial pattern breakout, okay, and hit the bullish price targets to the upside. So if we end up finding support here, we still need to be cautious of 0.0167. That's our breakout level. And once we're actually above there, that's when we can potentially come up to 0.0194, 0.0207, as well as 0.0227. Now, what are some of the different signals that you can understand and really start to try to learn once we come up to these levels to tell if there's going to be potentially a big move to the downside, right? I mean, if you take a look, this thing went from 0.018 all the way down to 0.011 pretty quickly, right? That was within like a matter of a week or two. So that may have caught a lot of people by surprise. And even potentially, it could have caused a lot of people to lose money, right? That were FOMOing in on these prices up here. And then they see a sharp pullback and they just end up selling right away because there's been a sharp pullback and it didn't continue going higher, So there's a couple things you can look at. The first thing we'll look at is going to be the MACD. Now, you can use this to spot potential entries and exits, all right, based off of the red line here. So when you see this red line cross below, that's going to be a MACD exit signal, right? And so you see we get an exit signal right around here, and then we get a pretty sharp little pullback, right? Now, we don't reverse and completely go lower and retest our lows. We end up going back upwards, and that brings us to our entry signal. So we cross below here, we do get a nice little pullback, but very shortly afterwards, we end up getting a MACD crossover to the upside, where the red line here crosses above the blue line. And we end up getting a breakout of the chart pattern of that trend line right there, as well as coming up to our major breakout level and hitting that price target. Okay. And shortly afterwards, looks what happened. We end up getting a MACD sell signal right around this point on the chart, and you can see we're coming down now and testing our major retracement level. Now, another thing is going to be the relative strength index over here. Recently, we were overbought, okay? Now, just because something's overbought doesn't mean it can't go higher. And overbought is going to be above this dotted line here, which is 70. That's the technical definition of overbought. So we can see, you know, we start to go above overbought right around these levels, but we continue to go higher, right? A good important general rule of thumb, okay, and remember, just a general rule of thumb is you typically don't want to buy something when it's overbought, as the likelihood of it pulling back and there being some type of a pullback or negative decline is much more higher, right? Now, as I just showed you guys, just because something's overbought or near those overbought levels doesn't mean it can't go higher. That's just a general rule of thumb. If you look up how to use the RSI or the relative strength index, that's going to be one of the first things that you see is overbought and oversold levels. And you know, that's just a general rule of thumb. Okay. None of this video is financial advice. I'm just going over some different indicators and strategies that you guys can use to help understand the price action, and then make your own decisions on, you know, entries or exits or different things like that. Now, one thing that I do want to highlight, okay, is that even if we end up breaking below our 61.8% retracement level, we do have the possibility of a break and retest, meaning we broke out of this trend line here. All right. And if we come back down, yeah, we might be a lot lower, but this is going to be a potential bounce zone off of this trend line. Okay. And if we break out, retest, then we could actually get the move back upwards. Now, if we end up coming down into this range and breaking through that trend line and not using it as support, and we just blow right through it, this is going to be a term known as a look above and fail, right? Where bulls looked above, had the opportunity to keep pushing price higher on the breakout, but rather they failed and bears took control and were actually back trading inside of the range. And, you know, it's a downwards range and bears are still in control even after the bulls had the opportunity to really take that control. So be mindful of all the different possible scenarios. Above 0.0114, we have the potential for bullishness and to really get a nice move up here. We would look for something kind of like a 5-wave pattern. Okay, if you take a look, we have 1 right here, and then we would have 2, then we would have 3, and then we have 4, and then we have 5, right? And so it could be a potential scenario, but keep in mind, if we end up doing this, right, coming down, consolidating, breaking down, flipping our 61.8 to resistance, then we do have the potential to come back down, retest this trend line here, and see, you know, who's really going to take over, whether it's the bulls or the bears. So hopefully you enjoyed this video and learned something new. If you did, smash that like button, subscribe to the channel, and I'm out.